Joining us today, Carroll founder and CEO Patrick Carroll, whose company manages more than 33,000 multifamily units across 9 states. Patrick, great to have you. Those are big words. Talk about what needs to crack in order for us to get to that end point.
And unfortunately, in this situation we're in, things have to bottom out, and they haven't bottomed out yet. I was just reading there's $1.5 trillion of debt maturing on commercial real estate by 2025.
So in commercial real estate, we have $1.5 trillion worth of debt that is coming to maturity and has to be refinanced. The question is, the corporations and property owners in possession of these properties, how are they going to get out of this? Will they be able to refinance these assets and get into better loans so that they can hold on to them? Or will they get crushed by the forces of the market and have to liquidate these assets? And if that's the case, what is the collateral damage that's going to come out of that? There's a lot to discuss here, so let's get into it.
So sellers are not realizing how much their properties have lost value, and they're not willing to dump their properties yet because they haven't felt enough pain. They're about to start feeling pain. These lenders are spooked. There's no lending going on. There's no transactions going on, and it's going to be ugly.
So we're starting to get indications of just how bad this is going to be. If the prediction is that this is going to be as bad as 2008, think about what happened back then. Lehman Brothers basically fell on their back and AIG got put in a full Nelson. The Fed had to come in and save the day, and we had one of the biggest financial bailouts in history. So here we are again. The question is, will the same things happen this time that happened last time? Who's going to be the bag holder? Who's holding all of this debt, right? And then we know there has to be some type of insurance. So the question is, so who's the ultimate bag holder? And are these corporations that are the bag holders so big that they have to be bailed out by the Fed? That's the question.
I mean, it's going to be at least as bad as 08, 09. People don't want to say that, but downturns always are worse than the one before, and upturns are always better. I've rode the wave of price appreciation, rent growth, things like that since 2011. Well, the party's over, unfortunately. It's going to be okay in multifamily, but the office market is going to be destroyed. Hotels are going to be destroyed. It's going to be ugly.
So Patrick, a lot of the focus right now, and particularly in terms of some of the Wall Street notes and where regional banks, for example, are concerned, has been on office space and retail space, and this idea of a re-rating or need for those values and those prices to fall. The fact that you're in multifamily, are you seeing signs of weakness right now, whether it's renters or whether it's buyers of your units, or is this still a shoe to drop way far out? What are you seeing?
Well, I talked to one of the biggest landlords in the world yesterday. He's a good friend. He's a mentor. And his phrase was, what he's telling everybody is stay alive till 25. Okay. So based off that, it feels like, right now our fundamentals are great. People are paying rents. The market is healthy. What you have is a liquidity crisis. You have no transactions. There's no debt available. Cap rates have expanded over 5%. A year ago, they were at 3%.
So we have two key pieces of information that are very important. One, there are no transactions. And basically what that means is that lending is essentially frozen. From what I've been reading, it looks like lending has fell like 70 to 80%. That's huge, right? So if there's no transactions and there's no lending, then basically the doors are closed for these people to refinance these properties, right? The second part is the cap rate. So the higher the cap rate, the higher the risk the borrower has, right? So if cap rates are exploding and going higher, the banks are saying, look, you're asking me to take on a lot of risk. And if I'm going to take on that risk, you're going to need a lot more collateral and you're going to have to pay a lot more interest if you want me to refinance your loan. Now, the question is if these properties have massive vacancies and they're not cash flowing, to be positive, then what's the point in refinancing anyway, right? So will these people that are holding on to these properties be forced to liquidate? That's a really good question. Or are they going to play chicken with the Fed and hope that since we had a bailout last time in 2008, the Fed's going to come to the rescue again? Let's continue.
So if you do the math, that's almost 40% drop in value. No lender is willing to lend because they don't know where interest rates are going. And no one knows how to value these properties because no one knows where real estate, valuations are ended up. It's all based on interest rates. Office is a double whammy. The fundamentals are terrible. After, COVID, people work from home. The work week is now Tuesday to Thursday. Okay. And so people are taking less office space. No one wants to lend on it. It's a disaster. At least in multifamily, the fundamentals are strong and, I think they'll continue to be strong.
Yeah, that is the one thing about this cycle that makes you think maybe it doesn't rhyme with priors, right? This idea that, look at the JP Morgan memo yesterday asking managing directors to come back for 5 days a week. How much of the total problem in office, how much would you assign to this notion that you never really return to full office capacity?
It's at least 75% of the problem, right? Like once you allow people to work from home, they're never going back, and they can send out emails, they can do whatever, people are not going to go sit in the office. It's a flawed strategy. People can work from home, especially back office jobs like accounting, et cetera. So I think it's here to stay. It's a disaster. Developers are going to have to figure out how to repurpose office buildings. It's here to stay.
So what does that mean in terms of this frozen real estate market that you're talking about right now? What would need to happen to thaw it out? And I guess what happens to some of these properties if developers are trying to send them back to the banks and the banks don't want them?
So now we're getting a little bit more detail here to understand just what's going on with these properties, right? With the high vacancy rate, with high interest rates, high cap rates, banks don't know what they're looking at, therefore they don't want to lend, right? And so the other thing that's changed is society, right? We have now work from home, even though we see corporations are trying to get people to come back to the office. But for the most part, office space is fundamentally changed forever, right? I don't think they're going to be able to get rid of work from home. Corporations do see some advantage in some cases. It helps them to minimize their commercial real estate footprint, which is actually a benefit to them. It makes the employees happy. And as long as they're able to monitor productivity and they're getting what they need to out of their employees, there's no need to have them in the office just to babysit them all day. Also, it's better work-life balance for the employee. They don't have to get on the road and travel to and from the office. So they get to save that time, right? Those type of perks makes people want to work more, right? Because they're seeing the benefit. But at the end of the day, it's the bag holder that's left, trying to figure out what they're going to do. They're going to have to try and figure out if they can repurpose office space. Definitely, they're going to have to raise capital if they want to try and hold on to these properties, right? And so if they have to do that, what gets liquidated? Is it stocks? Is it residential real estate that gets liquidated to hold on to these properties? It's a big question, right? And then the other thing we need to ask is, what is the market asking for? Are they going to take accountability and realize that they got in too deep and say, you know what, I'm going to take responsibility and just let these properties go because I can't afford them anymore? Or are they going to play chicken with the Fed and hope that they're going to get another bailout because the problem is just too big and it will cause too much damage to the markets? Therefore, we have to go ahead and devalue the currency by the Fed printing money out of nowhere to paper over the losses, right? Maybe they don't want to mark these assets to market. But the question is, what is they're asking for? And we're about to hear the first wind of it.
Well, to open the market back up, the Fed needs to drop interest rates back to where they were, and people will jump back in the market immediately. Until that, no one knows, again, how to borrow, how to value real estate assets, or, by the way, stocks, any type of asset. It's all predicated on interest rates. So what's going to happen is these lenders are going to have to suck it up. I think you're going to have local municipalities like New York's going to have to figure out the office problem. It's the biggest office market in the world. And, probably 80% of those buildings don't make sense anymore. And so, I think you're going to have to see cities step in and incentivize developers to convert that to affordable housing or some better use.
Well. Certainly not surprised. See, cheap interest rates is like heroin. Once you get a taste of it and it's in you, you can't get it out of you. And so here they are again, begging for lower interest rates, right? They want cheap money. Give us cheap money. That'll fix the problem. Cheap money is what got us here, right? And so rather than really take accountability, right, they're looking for the Fed to bail them out once again. So there you have it, folks. You're hearing it straight from the horse's mouth. What are your thoughts? Do you think this is going to be a huge wave that hits us like the 2008 financial crisis? Or do you think the Fed's going to step in and bail everybody out? Time will tell, and I'm pretty sure we'll find out in 2025.